The financial markets are a lot like the weather, constantly shifting, sometimes calm, sometimes stormy. Just as a sudden storm can catch you off guard, market changes can surprise even the most seasoned investors. The atmosphere is always charged with possibility, and every day brings a new forecast. These ups and downs are called market volatility, the pulse of the global economy. Volatility is what keeps markets alive and moving, reflecting the hopes, fears, and decisions of millions of people around the world. Understanding this pulse matters for everyone, not just Wall Street insiders. It affects your groceries, your mortgage, and your retirement savings. Whether you're buying a loaf of bread or planning for your future, market swings ripple through your daily life in ways you might not even notice. Why do markets move so much? It all comes down to information. News, like a president's comment, a company's profit, or a sudden global event, can change the mood of the market in an instant. Even a shift in oil prices can send prices soaring or tumbling. The smallest headline can trigger a chain reaction, affecting everything from gas at the pump to the value of your investments. Billions of decisions made in seconds drive these changes. Every click, every trade, every choice adds up to the market's heartbeat. Today, January 15th, 2026, markets are reacting to a whirlwind of news, political drama in Washington, new policies and unexpected developments that keep everyone guessing. Record profits from a Taiwanese tech giant are making waves, sending shockwaves through the technology sector and beyond. And a sudden drop in oil prices is reshaping the energy landscape, impacting industries and consumers worldwide. Each story is big, but together they paint a complex picture of the global financial landscape. The world's markets are more connected than ever, and every move matters. We'll break down what's happening, why it matters, and what it means for you. Our goal is to make sense of the chaos and help you see the bigger picture. From the White House to Wall Street, from Taiwan to the oil fields, these are the market moves that matter. Every headline, every number, every decision is part of a much larger story. Let's dive in, because it's all about the money, and understanding it can help you navigate whatever comes next. In Washington, President Trump is once again clashing with the Federal Reserve and its chairman, Jerome Powell. The tension between the White House and the central bank has reached a new peak, with both sides digging in over the direction of US economic policy. The Fed sets interest rates, shaping the entire economy, and is supposed to be independent from politics. This independence is crucial, allowing the Fed to make tough decisions without political interference, even when those choices are unpopular. That independence is now under threat, as political pressure mounts and the lines between government and central bank begin to blur. Trump recently said he has no plan to fire Powell, but the Justice Department has launched a criminal investigation into the Fed chair, an unprecedented move that has stunned both Wall Street and Washington insiders. Powell denies any wrongdoing, calling the probe a political tactic to influence rate policy. He insists the Fed will continue to act independently, despite mounting scrutiny and public attacks. The president's words and actions are sending shockwaves through global markets. Investors are reacting to every headline, and volatility is on the rise as uncertainty grows. Trump wants lower interest rates to boost the economy, dismissing concerns about weakening the US dollar. He argues that cheaper borrowing will fuel growth, even as critics warn of long-term risks. He's even floated names of possible replacements for Powell, signaling a real chance of leadership change at the Fed. The prospect of a new chair adds another layer of unpredictability to an already volatile situation. This political maneuvering creates deep uncertainty about the future of US monetary policy. Businesses, investors, and everyday Americans are left wondering what comes next. Investors hate uncertainty, and this standoff is making everyone nervous about who will control the world's most important central bank. The stakes could not be higher for the financial system. The stakes are high. The outcome could reshape the global financial system, affecting everything from interest rates to international trade. The world is watching, and so should you. Every development is being closely monitored by governments, investors, and ordinary citizens around the globe. The Fed's next move could impact every corner of the economy, from Wall Street to Main Street, affecting jobs, savings, and the cost of living for millions. the drama is far from over. As the standoff continues, the future of US economic leadership hangs in the balance. The Fed standoff isn't just political drama, it hits your wallet. The decisions made in Washington ripple out to every household, affecting how you manage your day-to-day finances and plan for the future. Interest rates set by the Fed determine how much you pay for loans and how much you earn on savings. When rates change, your credit card bills, student loans, and even your retirement accounts can all be impacted. Lower rates mean cheaper mortgages and car loans, making it easier for families to buy homes or upgrade vehicles. But they also risk fueling inflation, which can drive up the price of everyday essentials like groceries and gas. Trump's push for aggressive rate cuts could spark a short-term economic boom, with more spending and job growth. But there's a catch. It comes with the risk of runaway prices and a potential bubble that could burst. If inflation takes off, your paycheck won't go as far, and the cost of living could soar. Everyday expenses, from rent to groceries, could become harder to afford, squeezing household budgets. The Fed's independence is designed to prevent short-term political gains from causing long-term economic pain. It acts as a safeguard, aiming to keep the economy stable even when political winds shift. There's also the value of the US dollar at stake. A strong dollar helps keep imports affordable and supports America's role in the global economy. Global investors trust the Fed to be stable and predictable. If that trust erodes, they could pull money out of the US, weakening the dollar. This could make it more expensive to travel, study, or do business abroad. A weaker dollar means more expensive imports and global market instability. It can also lead to higher prices for electronics, clothing, and other goods made overseas. That's why this fight over the Fed matters to everyone, not just investors. Whether you're saving for college, retirement, or just trying to make ends meet, these decisions affect you. The outcome will ripple through every part of the economy, touching jobs, businesses, and entire industries across the country. Your savings, your job, and your future are all on the line. The choices made now could shape your financial security for years to come. The world is watching for the Fed's next move. Every headline and policy shift is being analyzed by experts and everyday people alike. The stakes couldn't be higher. Stay tuned to see how these decisions will shape your financial future. Across the globe, Taiwan Semiconductor Manufacturing Company, TSMC, just posted record profits, blowing past expectations. TSMC is the world's largest contract chip maker, building the advanced semiconductors that power everything from smartphones to AI. Their chips are the backbone of the digital world, and demand is exploding thanks to artificial intelligence. Companies like Nvidia and Apple design the chips, but TSMC makes them a reality. This gives TSMC enormous influence over the tech industry and the future of AI. Their record profits signal a booming market for advanced electronics. Investors watch TSMC as a barometer for the entire tech ecosystem. The AI revolution is real, and TSMC is at its heart. TSMC isn't just celebrating profits, it's doubling down. The company plans to spend up to $56 billion this year on new factories and equipment, a massive leap from last year. This investment is crucial to stay ahead in the high-stakes chip race, especially as AI demand soars. Building cutting-edge fabs is expensive, especially overseas in places like the US and Japan. TSMC's leaders warn that these investments will squeeze profit margins in the years ahead. It's the classic challenge for a market leader: invest to stay on top, but risk lower profits. For investors, it's a mixed picture: huge growth, but rising costs. Even the king of chips faces tough choices. The AI race is a marathon, not a sprint. Staying ahead will cost billions. It's earnings season for Wall Street's giants. JP Morgan, Bank of America, Citigroup, and Wells Fargo just reported a combined $123 billion in profits, a 5% jump from last year. Despite economic headwinds like inflation and trade tensions, the banks are thriving. Higher interest rates have boosted their profits, thanks to wider net interest margins. The last two big names, Morgan Stanley and Goldman Sachs, will reveal how investment banking and deal-making are faring. Strong bank earnings show the US financial system is resilient. Banks are better capitalized and more efficient than ever. Their performance provides stability for the broader economy. Wall Street's health matters to everyone. Bank executives have a unique view of the economy, and their message is one of cautious optimism. Despite inflation and a slowing job market, they see resilience. Consumers are still spending, and most are paying their bills on time. Businesses are investing, though carefully, and delinquencies remain manageable. Bankers acknowledge risks, tariffs, inflation, labor market pressures, but say the economy is bending, not breaking. Their confidence reassures investors and the public. It suggests a deep recession isn't imminent. The US economy has momentum, even if growth slows. Banks are prepared for bumps, but don't see a crash ahead. This steady outlook supports market sentiment. The financial sector's stability is a buffer against panic. For now, the foundation holds. Oil prices are famously volatile, and this week was no exception. After a 5-day surge driven by Middle East tensions, prices suddenly plunged. The catalyst? President Trump's comments suggesting the crisis in Iran was easing. With fears of supply disruption fading, traders sold off oil, causing prices to tumble. Brent crude dropped to $64.20 a barrel. US crude fell below $60. It's a classic case of how geopolitical news can swing commodity markets. Oil prices often move more on fear and headlines than on actual supply and demand. For consumers and businesses, these swings have real-world impacts. The market's mood can change in an instant. The day's market stories aren't just headlines, they affect your life. The Fed standoff shapes your loan rates and savings returns. TSMC's AI chip boom signals a tech future that will change jobs and industries. Strong banks mean a stable economy, while falling oil prices can lower your costs. These events are all connected, influencing each other and your wallet. Understanding them is key to navigating today's economy. Financial literacy empowers you to make better decisions. Whether you're investing, saving, or just trying to get by, these moves matter. The market's pulse is the heartbeat of the global economy. Listen closely. The future depends on it.